this is an introduction to P11Ds, what they are, what we need to do with them, and how we're going to help you deal with the issue of reporting expenses and benefits. We'll spin through the type of things that we do, the type of expenses and benefits that are most familiar. We won't cover them all. We'll look at the ones that are very common, company cars, private medical insurance. The ones that are less common, interest-free loans, accommodation that comes with a job, those type of things, then we'll skate over fairly quickly. There is a link which we can pass out afterwards, which is to the HMRC guide on the subject, which I think is 60 or 70 pages long, identifies every type of benefit known to man and its potential tax treatment. So, the role of a P11D. So in essence, a P11D is the form that we submit to HMRC, which gives the benefits that you as an employee have received from the business as your employer. So it records the cash value of the benefit, and it records it in a way in which HMRC can identify what liabilities that benefit will attract. So different benefits will attract different liabilities, and in some cases, the way in which those benefits have been provided will determine the way in which they're going to be tax and or national insurance paid on them. So the P11D, which you'll see in a minute, is if you've ever dealt with P11Ds before, then you'll see it. It looks very complicated, and it is not to be underestimated how complicated it can be if you don't put the right things in the right boxes. So what we're doing is looking at the benefit, the type of benefit, how you've procured that benefit. So you've got choices. You may have paid the benefit for the benefit on behalf of the employee. You may have reimbursed the benefit. And there are two ways you could have paid for the benefit directly. So the employee could have ordered the benefit or procured the benefit themselves, or you could have done it for them. And depending on how those questions are answered, how the benefit's been provided, it will determine the way in which it's treated. And that's why the P11D form is sprinkled with seemingly duplicate headings. So you can report benefits in a number of ways. The way in which they're recorded and submitted will determine what you pay. It's very important that we ultimately understand what's being provided, how it's being provided. And in this, the less common benefits, so, home phones are and continue to be a benefit that can be dealt with in so many ways. So you get a director with a home phone. Is the company paying the bill? Is the company paying for calls? Did the company order that phone, or did the employee? And all these things need to be answered. So it's basically the perks and other things you get that aren't recorded on your payslip, typically. Tax and Class 1A tax, national insurance and Class 1A national insurance may be payable on all or some of those benefits. Some benefits by their very nature will be something that should ordinarily be dealt with as if you'd had the cash and it's recorded on the payslip at the time you received the benefit. The P11D is then a device for reporting those benefits and for dealing with other benefits that aren't dealt with in that way. So it's it's a gathering of information, but it's basically those benefits, expenses, and perks of the job that aren't dealt with in other ways. So there we've got what is a benefit in kind, and it's basically a benefit that's provided to you that isn't wholly necessarily incurred in the pursuit of your employment. So if in the work you do, you don't need that benefit, then, you don't need that payment. So, it's a car that you don't use for work purposes, or it's private medical insurance, which isn't directly related to your work. Mileage that isn't necessarily business mileage, all those type of things They are what's recorded on a P11D. Now, in recent years, the P11D reporting has eased somewhat in the sense that if you took it back 3 or 4 years, you would have to, in theory, report on your form P11D if you had a company credit card and you made purchases on that company credit card, you had to record it on a form P11D. It was a pointless exercise. You know, to avoid it, you had to go through a process whereby you were just issued a purchase order for the thing that you were going to buy, and then you bought it on the company credit card, etc., etc. Mileage was recorded years ago as well on P11Ds. Now it's more limited in the extent to which it's recorded. But typical ones that we see on a day-to-day basis, private medical insurance, because if it's a benefit that's being provided to you as an employee, it doesn't come for free without a tax charge. Company cars, again, they attract a tax charge. If they're a company car that's made available to you, you don't make a capital contribution and you're using it for personal mileage and it's parked at your home address, then it's ultimately going to represent a benefit to you, whether it's being used or not. Even during the pandemic, when cars were happily sat on people's driveways, unless they stuck the keys through the letterbox or returned the car to their place of work, it was deemed as a benefit and it was taxed as such. So there was no easy route to avoid taxation of that benefit. Mileage allowances, they're taxable once they exceed the approved mileage rate. So above 45 pence or 25 pence for 10,000 miles. If you receive a payment that's in excess of that, so if you get £1 a mile, for example, then the excess you get over the approved mileage rate would represent a taxable benefit and would be recorded on your P11D and dealt with when we submitted it to HMRC. So you need to consider with P11Ds, consider anything that you provide to your employees that is not in pursuit of their work. Look at it closely, consider whether or not that is a benefit or could be construed as such. Awful lot of things could be. And as I say, there's your expenses and benefits A to Z. And if you go to that, you can find anything, taxi and bus fares, you can find loans, you can find telephone of all different types, along with the more common benefits, company cars, private medical insurance, company vans, fuel for said company vehicles. So that gives you a definitive list. You'll still, even if you spend hours poring over it, you'll still find things that aren't in there and you have to consider in other ways. So I happen to use a motorbike for travel to work. You won't find a motorbike in there. If I was to be charged on it, if it was owned by the company, it would be an asset made available for my use and I'd be taxed for that. So ultimately I would pay a tax charge for it. You won't find it in their guides. So there are always things that don't quite fit the bill. If you're looking at one size fits all, you won't find it. But it's it does give a good indication of the type of things that are important in considering whether and how to tax a benefit. Okay, payrolling of benefits. So for a number of years now, it's been possible to payroll benefits. And what that means is instead of reporting them on a P11D at the end of the tax year, and they're dealt with in arrears effectively, you're reporting for tax year to the 5th of April 2023 in June/July of 2023, and it's always been dealt with in arrears. So potentially the tax you pay now may not reflect the benefit you get now because there's a catching up situation to be done. So if you start getting a private medical insurance midway through a year, you won't see a tax charge for it until your P11D is submitted, which could be 12 months later. So the concept of payrolling a benefit is to bring benefits into a real-time reporting sort of realm. What they do is instead of reporting it on a P11D, you have to measure the benefit in exactly the same way so it doesn't get you away from any of the calculations, And in fact, it probably makes them more complicated. But it's what it does. It takes the value of a benefit that you're expected to receive in a year, and it splits it evenly across the remaining part of the tax year. So it will be, and we would show it on a payslip as a payroll benefit. And in that way, you pay tax on it as you go, effectively. So it's a great idea. I have no issue with the idea. I think the idea is great. The logic of paying for your benefits in real time is inescapably a good idea. I think the difficulties arise in the practical application of it, in the way that it's very much sold as a reduction in admin, and it's much better for everyone concerned. The reality of it is that it spreads the admin burden from maybe a month at the end of your tax year, getting together your details of private medical insurance, who's had what car, who's, during the course of the year, which cars have changed, etc. And you're having to do that on a day-by-day, week-by-week, month-by-month basis. You're having to track in real time what those benefits are actually worth to the employee. You then have to deal with that through payroll. So if you had private medical insurance that was costing the company £600 in a tax year, £50 a month, it would make sense. You pay tax on £50 a month. At the end of the tax year, it's all done and dusted. It works very well if A, that employee doesn't leave, B, their premium doesn't change, C, they can leave you, they can join you, they can come mid-year, they could decide not to have the benefit. It really doesn't deal with that very effectively at all. So you can actually end up in a position where you don't actually get much benefit from it. Tax codes, because if you're payrolling your benefit, instead of a tax code that you might currently receive, so you might get a coding notice which includes a benefit. So your standard coding notice is 1257L, standard personal allowance. If you had a company car now, for example, your tax code will change to a lower figure, which reflects the benefit you're receiving. If you payroll your benefits, then you would continue on that normal tax code, and the tax is then paid on a notional benefit that's taxed through payroll. So your tax code situation changes. So immediately, one of the difficulties with that is that you're still reliant on HMRC to get it right. You cannot decide to payroll benefits halfway through a tax year. So the decision, if you were going to payroll benefits, has to be made before the 5th of April in the tax year you're in. So once you hit the 6th of April, you can no longer make that decision. You could do it voluntarily up until this tax year, but you can't do that now anymore. So you basically have to make that decision, and you have to have planned it in advance. I'm not a big fan of payrolled benefits. I think they're more trouble than they're worth. The benefits that you get are no need to report, no need to produce P11Ds. What you do have to do is produce a benefits statement, which is exactly the same information, but you give it a different name, and it's a reduced admin burden. I don't think so. So payrolling benefits, I've never been particularly keen on it. It puts far more in the hands of an employer than it in our hands. So P11Ds, we get the information, we can work out what the benefit is, how it should be taxed, what it means, get the calculations right, and everyone is taxed correctly. If payrolling the benefits is something that you as employers, you have to keep those spreadsheets and you have to keep them up to date. You have to know that Fred ceases his private medical insurance on the 5th of September. You have to be capable and responsible for prorating that benefit across the year and making sure that the payroll benefit that we record through payroll is as it should be. It sounds complicated because it is complicated. There are benefits that you cannot payroll. So the two that you cannot payroll are loans provided by interest-free loans or low interest loans, and accommodation provided by the company. At the moment, you can't payroll them. HMRC have for the last 5 or 6 years been selling singing the tune that we're going to do away with P11Ds. All benefits will be payrolled someday. But until they solve the problems with some benefits that can't be payrolled, I suspect it will continue as it is, and as long as it does, and until it is a more workable, transparent system that we can manage on our clients' behalf, then we just avoid it where we can, quite frankly. The other change that's worth mentioning this year in relation to P11Ds is this is the first year where two good things have happened. One is that you can no longer submit a paper P11D. So up until now, you could submit a paper, you could print it off the website, complete it, send it off, which had great benefits if you forgot, because you could say you sent it, and during the pandemic, you could say you sent it, but HMRC have decided the digital world is one in which everyone should be filing digitally. So now the statutory part of the legislation is in place to allow for people having to submit online digitally. The other change is that after umpteen years of online filing being available, you can now actually make a change to a P11D. So if you submit incorrect information for a benefit, you got your calculations wrong, someone had the car for a longer time than you thought, they didn't have the car, whatever the reasons are, changes to P11Ds do happen. Up until this year, you had to deal with that by a letter to HMRC. There was no, so you could file the form digitally. If you realised you'd made a mistake, you couldn't make the change digitally. And so you ended up sending a correction to HMRC, which causes all sorts of problems because they don't work as quickly as you might like. Have they received it? Have they acted upon it? It was always very difficult to tell. At least now you'll have a digital audit trail that says, yep, it was received. Yes, whether they've acted on it, whether it's reflected in the tax code, you will at least be able to say with absolute certainty that something has been submitted to HMRC. So I think that's really positive that they've finally taken a step where you can dispense with the letter to HMRC. And it was always a room in Long Benton House, but you never knew quite which room. So one year it might be 11B, and the following year it'd be 13C. And so where these letters actually went was always in the lap of the gods, I think. So yeah, payrolling the benefits, it's there. It will be by HMRC always sold as absolutely great thing. I sit on the payrolling the benefits webinar from time to time in the hope that things have moved on, that agents can effectively manage the process for their clients. And when they can, we would treat it with a bit more seriousness. But as long as you can do a P11D, it keeps it in one place. The other thing with payrolling is communication with employees becomes much more important, because you have to let them know exactly what's going on before it actually happens. So you have additional responsibilities in terms of when they join you, letting them know how it's being dealt with. So yeah. P11D reporting deadlines. There are a number of deadlines in relation to P11D reporting. The main one being the 6th of July. So 6th of July is the date by which you must have filed your P11D with HMRC digitally now. So you know that is a date cast in stone. So the days when you could send it on the 6th and they'd accept up till the 10th, allowing for the post and all the rest of it, are long gone. It's a hard date. It is the 6th of July. And we have to treat it as such. So in the past there was some flexibility around this particular date. You knew that you wouldn't get charged a penalty if you submitted it by the 19th. That's no longer true, or at least I'm not prepared to put it to the test to find out if it is true. So it's the 6th of July. So that's the P11D reporting deadline. The other deadline that is pertinent is the deadline by which time you must have paid your liabilities, your Class 1A national insurance liabilities. And that is the 22nd of July. So it's exactly the same as your PAYE payment deadline. If anyone still pays by check, then it was always used to be the 19th of July, electronic payments, because you can make the payment on a specified date. 22nd of July is when that payment must hit HMRC. This year, it's always the last working day, so it'll be Friday the 21st of July is when the payments will be due. Alongside a form P11D sits a form P11DB, P11DB is a form which basically consolidates, brings together all of the liabilities on your numerous P11Ds, and it rolls it all up into one figure, and it's the liability you have to pay. On a class 1A liable benefit, it used to be 13.8%. This year it's going to be 14.53% because of the abortive attempt to introduce the health and social care levy. Because it was in place for a number of months, we now have a hybrid rate which is being used this year, which is 14.53%. Next year it should revert to 13.8% again. So it's your class 1A liability is going to be higher this year on the same benefits than it would have been last year. That's in addition to any changes in the increased taxation on company vehicles that may have led to an increase anyway. But on the same benefit for an employee, you will pay more as an employer by, whatever, 1.73, what was it? 0.73%, isn't it? So it's an additional cost, probably not significant, but it's worth highlighting. If you're used to 13.8, because it's been 13.8 for a good number of years now, so it might come as a bolt out of the blue. So so that was worth mentioning.